going on, guys? Good morning, good evening. Hope you guys had a great weekend. Welcome back to another pre-market live stream here with the Everyday Growth Advisors. Definitely an interesting week last week. At the end of the week, I did tell you guys and try to warn y'all that this wave down here was almost at its end. We were expecting that squeeze. That's pretty much hit it perfectly right there. I alerted you guys and also the Discord. So if you actually tuned into the stream last Friday, you would have really benefited a lot because you would have caught this wave to the upside. Obviously, it did happen very, very quickly. You had to play it very quickly, but I managed to really close out some nice profits on Thursday and Friday to set my week really, really green. I closed close to about $40,000 this past week to kind of close out the week with a very, very positive note. And it was mainly because I was trading SPX only because there was a lot of action going across all the mega caps. All of them were moving in tandem. And we went through a lot of these setups on Friday. I already kind of gone through these setups with you guys. I was kind of eyeing all these potential opportunities that were all in falling wedges that were ready to break out, even ARKK, which I had mentioned, and even CrowdStrike, right, which was one of my top watches. If we took CrowdStrike, congratulations. We obviously played that one, and it's up nicely pre-market here. We grabbed some of the 130 calls for 17th of March. As you can see, I had alerted on the Discord just on Friday. So that one's going to pay pretty nicely. Of course, there was a whole bunch of other setups as well that we've been looking at for a couple of weeks now. So let's kind of dive into all of the different things that you should be keeping your eyes on right now. But right before we start, let's talk about the macro. And obviously, in this week, nothing has really changed from Friday to today. But as I've mentioned, the market has priced in peak terminal rates at this point. But we do have a catalyst event tomorrow, which is potentially going to be a bit volatile, which is Fed Powell talking in front of the Senate Banking Committee. So that might cause the market to have a little bit of jitters, but at the same time, this is very bullish price action movement. At most, I see us coming down right now to kind of retest this 40.30 level, maybe spill over down into 40.15, or maybe a bit lower than that would get to around 4,000. Retest some of this downside perhaps. And if we don't retest this downside, then we might just consolidate sideways or kind of in a bear flag today. That's likely to happen today. So I don't think that, we'll get a big, huge move up again today. That would be very surprising to me. But I think more than likely what you are expected to see is kind of consolidation here after that move. And then tomorrow you have the Fed Powell talking in front of the Senate. Not to mention, this week we also have jobs numbers which will be coming out, which will be really, really important. So macro news really driving the picture right now. Next week we will also have inflation data, and I believe it's also going to be OPEC's week. Right, so next week is going to be very, very abrupt price action, and I wouldn't be surprised to see that this week we have, some kind of consolidation and maybe continuation, and then heading into next week we have a correction, because the OPEC weeks tend to create volatility and then also re-rolling of exposure in terms of delta for market makers, and of course all of them need to roll out their exposure based on the expiries of the contracts. So just from a macro standpoint, there is quite a few things that will be catalysts in terms of the macro news heading into this and next week. Therefore, you have to play it a little safer. This past week with this move up, that's when you had to really put on the dry powder, take advantage of that moment. When the market gets directional like that, you apply the risk. When the market is choppy and moving sideways, you try not to apply the risk, right? And a very similar thing happened on NASDAQ, obviously, right? Now, let's just look at the very big macro picture here with the S&P 500 in terms of technicals, because obviously we need to have a look at that. And if you just look at this from a trend standpoint, don't talk about anything else except for trend, right? We went from making lower highs, lower lows, and then we had a rejection here. Then this confirmed that we were indeed making a higher low, and then now we made a higher high and another higher low. From a technical standpoint, this is now three lower highs, and then two higher highs. This is now officially a uptrend, right? Just looking at the trend right now, like you can obviously see, we are kind of heading into a uptrend. Okay, so obviously not very perfect, but you can kind of see this is kind of the trend that is taking place right now, the switch in trend, right? And It's a pretty wide trend line that has a pathway all the way up into the supply zone, which is definitely going to be retest at some point down the line. The 4200 to 4300 level will be retested in sometime down the line. It's when we get there, right? So from just this perspective right now, you can see we have reversed out and we retested the breakout very perfectly, which was exactly what we were looking for. And I did mention to you guys about 2-3 weeks ago, I said, hey, you know, when we do get down to this 3940 level, this is when I really want to go bullish, right? And so now you're gonna have multiple opportunities to go bullish here. So my advice is don't run helter skelter and try to grab this wave up exposure here to the upside. Wait for this thing to consolidate, wait for it to retract a bit further downward, and then you'll have your opportunity to enter long. There will be multiple opportunities for you to enter long, so don't scare yourself into thinking that you've missed the train. A lot of you are really funny, and I'm not sure why this happens, but when a wave up happens, then all of a sudden you feel bad for not taking exposure. And when the wave down happens, you sell in fear. And then a wave up happens again, and you're like, oh, no, everybody's buying, let me get on. And, you have to learn at some point, like doing this for a while, you have to learn that you take the exposure on the opposing ends. Because that's when the risk-to-reward ratio is the most favorable. And that's when I was waiting personally to get exposure in the market, which is exactly how I played it, right? Just on, when was it, Thursday, itself, I closed out majority of my profits, right? And I wrote in my newsletter this week, I just sent it out like about an hour and a half ago, that you can see my win rate for the week is actually really terrible, right? My success rate, very terrible. It's only 2% win rate. But that doesn't mean jack shit, because at the end of the day, your risk management is what gets you there, right? It gets you there in terms of profitability. My average win was $2,000 because of the fact that I had a very high paying risk reward ratio trade, right? I took on risk and applied it in a situation where the risk to reward ratio was extremely beneficial for me. And so that one position size trade got me into where I was for the weekend and allowed me to get into that profits, right? So keeping that tight profit to the downside and having that great upside exposure was a great way for me to kind of balance that risk reward ratio out for the week. And this is something that you really have to understand about trading. You might be waiting around really long time, and then that one time comes and you need to really take advantage of it. So I wrote about it in the newsletter. I hope that you'll take some time to read it. There's a blurb about just managing your mindset at the end of that newsletter. Now with NASDAQ, we have this $12,400 all the way to 12,400 and let's just say 500. 12,400 or 12,500 is a main key level for a potential backtest here, maybe before another move to the downside. So if anything here and SPX starts to consolidate, it's going to consolidate in this little bull flag that's forming, or rather NASDAQ's going to consolidate and SPX will probably follow in this little bull flag that is forming. Now on SPX it's not really a bull flag. On NASDAQ it kind of is more of a bull flag. Just the way that these two moves are structured right now, NASDAQ is more in a bullish formation than SPX is. SPX is obviously in like a wave down, wave up scenario. This is clearly a ABC wave, so now you'll be looking for the next sequence in this bullish wave. And obviously if this is the first, second, then the third wave is going to actually be the biggest. So therefore, this is the reason why I can kind of, half confidently say that the next wave is actually going to be the bigger upper wave here. And, it boils down to Elliott wave theory and Fibonacci sequences, which kind of give you a good insight about that. Okay, so just from a technical standpoint, we are reversing out of a downtrend. We're moving into an uptrend. And then we're breaking some really key levels here. 40.60 got back tested almost there, right? 40.56 is the high of that candle. And now we will be looking for backtests of 4100 and then 4150 and then eventually 4200 and then 4300 up into these regions here in the possible supply zone. But first we have to clear all of these booby traps that are up here. Okay, now also I mentioned in the newsletter that one of the reasons why we haven't really been able to sell off that hard is because, you know, the VIX also has been a lot to play in this structure of the market. And when the VIX rallied up to 23 bucks about, I want to say 1 or 2 weeks ago, I did mention to you guys be extremely careful because, you know, as long as it's not above 24 or 26, it's still in a very muted range where it's not really going to cause that much mayhem, right? But the main thing that we were watching and I have been pointing out to you guys for multiple weeks now was the US 10-year Treasury, right? And this was the more important thing where I was mentioning that if we get above 4% and head up into these 4.2 or 4.3, 4.4 levels, this is going to cause more of the mayhem than, you know, anything else. And so right now, we got firmly rejected at 4.089. And so we are probably coming back down here to backtest these levels here, which is going to cause you know, that little relief and pressure for equities, right? And once the 10-year bond starts to find some ground here, we'll have to see if ultimately it breaks down from this structure, or is it going to bounce and once again head to the upside, because that's going to cause more pain for bulls to get up to those levels that we're wanting to get up to at 4,200 and 4,300. Okay. On top of that, we have the dollar, which is also consolidating here. And if the dollar comes down, then remember equity is going to start to go up as well. So this will also relieve the pressure on US equities if the dollar starts to weaken further against a basket of currencies. So there's a lot going on here, but we need to make sure that the dollar doesn't rally and the yields continue to stay suppressed. These will be two things that you have to keep your eyes on, okay? Apart from that, let's have a look at a couple of sectors that have really great opportunity. One of them is healthcare. Healthcare been in a very big downtrend, XLV, and you know, it looks like it has found a little bit of a footing here, which has been past level of demand. Looking for, I have already taken some shares in terms of exposure. I took some long-term shares of a bunch of different businesses last week, right before this rally happened. So right at the bottom here is where I picked up some shares, because I, you know, witnessed that obviously these are pretty oversold at this point, right? Another sector that is kind of in a very weird phase is energy. It's neither here, neither there, not bullish, not bearish. But in my opinion, because this sector was performing so well last year, I think that this year it's going to deliver muted gains. So I've been actually looking for an opportunity to short energy, but it hasn't really given me the confirmation, nor the opportunity, which is the reason why I'm staying clear of this sector. Financials had a very big bullish reversal last week, so I cut my XLF bearish position, which I thought was going to go bearish, but didn't in the end. The price action didn't materialize. We ended up kind of moving higher here, so I cut my XLF position. But this was another sector that now I'll be watching pretty closely in the next couple of weeks. Then you have consumer staples, which have also been in a pretty interesting downward trend for a couple of weeks now. And this will be another sector that I'm going to be looking at for a breakout if the market stays suppressed for a while. And of course, industrials, which are on the verge of a breakout, is materials. So industrials is one of them, which I'll be looking for a potential breakout here this week. And one of my top watches is actually going to be Boeing, because I really like the chart for that one. It looks like it is ready to run higher, right? So this is one of them. XLI obviously has some room, some legs up into 106, 107. But the risk to reward ratio is not that great. This is more likely going to be like a intraday setup or maybe a one-day swing at most, but very not so high conviction. I would rather play the proxy through Boeing and play the volatility here than take the entire index, or rather the entire ETF, and try to, you know, get an opportunity to, of exposure there. So I would rather play individual stocks rather than the entire sector here. Then you have communications, which is also making a little bit of a recovery. Let's hope that if it breaks further upside, then, you know, you have proxies here with Meta, you have proxies here with Google, a bunch of other sectors. And then utilities also making a potential comeback. One of the top watches in this sector that I'm looking at is NEE. Has been bouncing up and down from this supply and demand zone multiple times now. So I'll be looking for that two-wave confirmation. If you've taken the EGA mentorship course before, I'll be looking for that two-wave confirmation from this bottom up structure to see for that trend change and be looking out for that confirmation to take that upside. So there's really quite a lot of opportunity if you just look for it. And then also, if bond yields continue to cool, then it'll be obviously a good opportunity to take exposure in high beta names. And one of the proxies that you can do that through is ARKK. I wrote about this on the newsletter. I've also put a trading plan on the newsletter. So if you signed up for the newsletter, you already have that in your mailbox. I've already put a trading plan around the ARKK fund. The two pivots are going to be 41.50 and $40. And so, above 41.50 would be nice and bullish, or you could also play the run up to 41.50. Below 40 with the rejection here would be the bearish rejection, and then you can play that downside. So make sure you have your plans and make sure you trade the plan, guys. I will also be looking for continuations in stocks like Microsoft, perhaps if it can give me a pullback. Google as well, right? This is a key level for it. Meta is another one. Pretty similar structure, pretty similar trades, right? You could definitely look at opportunities in these. And then, as I mentioned, Boeing, also Airbnb. This is another stock that I'm watching above, like 128 or so. I'll be looking to take exposure to the upside maybe. And then you have your Amazon and Apple, which aren't really that great setups. But if Apple gets above 157, 60, then yes, I would probably take some upside exposure there. But that would also mean that we would get a pretty big move on the S&P 500. So yeah, those are a couple of things that I'm watching. Okay, these are all the setups that I have for you guys, and I think that's pretty much all I have to cover this morning. I hope that's helpful. If it was helpful, say, hey, it was helpful in the comments. Also, make sure you drop a like and a subscribe if you can. That truly helps me out a lot. Remember that when you attend this stream, I don't ask for anything, honestly, except for the fact that you guys help me smash that like button so this video can reach more people, and we can help as many people as possible before the market opens. So I hope that you guys have a great trading session. Now go ahead, put your comments or chart requests in the chat, and I'll get to them right now. And I'll cover as much as possible. Oh yes, and then I wanted to cover Chinese equities very quickly. So while you guys are putting your ticker requests and your chart requests in the comments or the chat, I'm gonna really just quickly talk about Chinese equities before we jump into the charting. So with Chinese equities right now, it's really interesting spot because we have regulators within China that kind of are trying to pump liquidity, but then they took it away very abruptly through the reverse repo operations that they have. So once that reverse repo operations went away, all this liquidity got drained, and people started exiting their positions in the Chinese tech market. Now, we were like, I think up here when I first told you guys about the fact that there is a potential inverse head and shoulders forming on BABA. For example, this is a proxy that I used to look at, right? And obviously, the actual proxy that you want to use is KWeb, which will show you actually the entire Chinese, internet ETF, right? And you can see it's a similar kind of setup here. If you look at this, there's also an inverse head and shoulder kind of pattern going on, kind of like here. There's a left shoulder, and then that kind of comes up here, and then you have your head, and then just another kind of pattern here. Then you have your right shoulder, and then you have this potential move back up into this region. So if we were to kind of go and draw this out, then that's what that inverse head and shoulder looks like. And right now, the thing is, we don't want to get long in Chinese equities until they can sort that out in terms of the CCP injecting back liquidity into Chinese equities. So we've pretty much called this one out perfectly. A lot of people kept trying to buy the bounce in BABA, and I told you guys Guys, not until we get to like 87.58, that's your second level for a bounce, and we haven't really been able to bounce. Well, we've been holding above it, but I have a feeling that maybe one more drop might come and wash some of this liquidity out at around 82.26. But the 50% fib here, which is around that 87.58, could be a strong level for a potential bounce. It's just we got to keep an eye on this, right? So with Baba, I really want to only take this once we cross above $95. And that's really just the best way to look at this. Stop trying to guess when it's going to bounce. That people are going to lose a ton of money doing that. And you shouldn't be doing that because that's not the smart thing to do. You want to look for an opportunity where you have that confirmation move above, and then the risk to reward ratio is in your favor when you have the upward moves. Then your risk that you take on is all of this down here, and then you have a huge upside to trade Baba up into as a swing trade. So I always like to think about it from the perspective of probability and statistics rather than just trying to act on emotions. Remember, the market is a place that will chew you up and spit you out if you don't do things in a orderly fashion. So I just wanted to give you guys an update about when I will be looking for entry in Baba and KWEB in general. I mean, I already have a shit ton of KWEB and Chinese exposure in terms of shares, but when do I actually want to actively trade this in terms of options? I don't think the time is yet. Once we get above 95, I'll be a bit more comfortable, and then I'll probably start taking some upside exposure here. Okay, so that's all I have for you guys today. Oh, no questions, no comments, nothing at all, and only one person found it helpful. Damn, you guys be tough today. Is it the Monday blues or what? I hope that you guys are not having the Monday blues. You tune into this live stream. I hope that you guys have good vibes, and I wish you all the best in your trading session today. Make sure that you're not over allocating risk into these things. If today there is no momentum and volume, please don't force your hand. Sit in cash till you can figure out where that market momentum is going to go, and more importantly, wait for that pullback before you take that upside exposure. So just please don't FOMO into this. Just keep an eye on things and keep it cool. All right, well, I don't see any chart requests, neither do I see any comments or anything like that. So I'm going to end the stream right here. Jump on the Discord with our team. Remember, 14 days free trial still available. Click on the link in the description. Also, on Wednesday, I'll have a quick update for you guys about a webinar that we're going to be holding. It's going to be on the 26th of March between 7:30 to 8:30 Pacific time. It's going to be a webinar on the bond market. So I'm going to be kind of giving you guys a nice little lesson or overview on how bonds are correlated with equities and how the bond market works. And then also we're going to talk about trading psychology. How do you trade with a clear mind? So I'm really excited for that. We'll be putting out the announcement very soon on Instagram and also on all socials. So make sure that you sign up through the link that we provide, and then you'll be good to go. So keep an eye out for that, and I'll see you guys on the next live stream on Wednesday. Till then, peace, love you all, and take care.